Hey everybody, DayTraderRockStar here, and I want to talk about the Trump rally and a breakaway gap that just happened and the overall conditions of the market, and also want to talk and announce about this upcoming show this Wednesday. It's another overnight show. It's not an overnight show. It starts at 8 in the evening, after hour show, 8 in the evening, and then we go to about 10:30. So a nice little midweek show we do. It's called Cocktails and Candlesticks. It's live on DayTraderRadio.com. We do it every Wednesday. I've been trying to get them out there on a consistent basis. This will be the third one in a row, and I'm pretty sure we'll be able to keep the next few going. And I think there's going to be a lot more nighttime shows coming your way in the next few weeks, so I'll have some free time. But let's get to the, let's just talk about this breakout here, this recent breakout in the markets. Now, what's interesting here is you don't get to talk about certain breakaway gaps. You know, the market it's been a long time since we broke. Well, we've been chopping around and breaking out to new highs. It wasn't too long ago where we were actually at the highs, but this recent breakout here, we're going to go back here. There was some news on tax reform back here. The market gapped up. We were taking out the highs, and then we consolidated. And, you know, in this case right here, I remember this case because we traded this. I definitely thought there was a good shot of a follow-through gap, you know, what we call a kind of a runaway gap. I call it a runaway gap. It's just a running gap, a couple gaps in a row. And what happens, we pulled back here, and then we had a little reversal candle. It was almost perfectly timed on the 60-minute time frame. A small little trend line, and we continued to hold that. And then we had another gap up here, and I think there was some other positive administration news. And again, this all goes back to the Trump administration and why this market's rallying. And we consolidated a couple days, and then we had a decent reversal candle here last week, and then we had that gap out. And at this point, at that gap, this is, you know, really our second, almost third time of testing this thing. At that point, things started to change, started feeling pretty good. There was actually a flat line stochastic, you know, right here. It's actually pushed even further. I mean, this market is in full force bullish mode right now. We got to show you some charts right now that really point out some things. But this, we had the gap, but we looked for the follow-through gap, but we got that. And at that point, we took a trade on that in the SPY calls, and then actually took a trade with SPY calls looking for a runaway gap on Monday, or a gap up and continue, a gap and go. So you could call as much as you want. It doesn't really apply these days. You know, something you might read in a book a long time ago in technical analysis. You have different type of gaps. You have a breakaway gap, which I would consider this a breakaway gap because we're breaking away from consolidation. But you have regular gaps on news. You have, again, the runaway gap, the exhaustion gap, kind of the island reversal gaps. You know, there's other gaps, but this is a very powerful one because it's breaking out of a trading range. And this, in this case, we're making new highs. And in this case, you know, the volume's not that great. We always like to see these things increase in volume, you know, people rushing to get in. But it's still a good sign. You know, this is overall a good sign. And I expect a lot of the same to come here. Now, the timing on this, how do we time where the pull action? I don't think you have to really concern yourself that much, because what we do and what we're doing is we actually have a great technique on trading the intraday moves. You know, we have our methodology. This is basic overview and knowing which side you want to be on. Today, if we were trading the markets, if you go back and take a look at the markets here, we'll take a fast look at it. We are in an extremely bullish mode. So the goal this morning was to say, be careful on the shorts. You know, we're going to have a really bang, whatever we're going to call it, gangbuster of a day. And we closed. It was a nice close. Everything was beautiful on this. After hours going on right now. It did pull back a little, but overall the day was really great. And you know, not the best day to show you some examples, but what I will show you is an example on this other chart. I think this is very important. I might have to bring this over here so you can see it. There we go. We're going to go back to that 5-minute time frame. When we talk about that 5-minute time frame, that's the time frame that a lot of the scalpers and a lot of the short-term traders are concentrating on, and we concentrate on it too. And we've been seeing some great signals. So when you see a nice trade, and we traded the SPY options, and we got made 50% on our trade almost both times. That's an incredible return. and it's nowhere near like paying $220 for a SPY share. It's buying the options on that very close to expiration, and the average price of these things are around $1. Sometimes in this case, I bought them at 63 cents, and whatever I sold them at. And then yesterday, day before yesterday, the Friday, we bought the calls. I think they were 86 cents. We sold, well, maybe they were the 60 something cents. We sold them at $1.09 today. Yeah, so 60 cents to $1.09, and you just can't. That's almost like a penny stock, right? Imagine buying something at 60 cents and selling it at $1.09. All right, do the math. And how do you find those positions? Well, those exact same setups come off of that 5-minute divergence signal or that 1-minute divergence signal. The bigger the time frame, the bigger chance of a bigger move. But what I stress, and I stress every single day on the radio, is there is one great setup out there, and if we could just have the patience and discipline to wait for it and take it and understand why you want to get in and why you want to get out, and that works across all time frames. And, we're talking about the 1-minute time frame, 3-minute time frame, 60-minute time frame. If you get the signal, it's going to give you an exit signal also. It goes with it. It's yin and the yang. You don't have to pay attention to it, and if you don't pay attention, your odds go down a lot. You still could play. You can still move up in this case of a buy signal. But I'll show you what I mean. You know what I mean. If you've been following day trading radio for a while, you know what we got going on here. So in this case, we're going to look at, let's see where our divergences were. This is actually today's 5-minute chart. And this is not a signal that just comes around every day. It's just a signal that when you do see it, you can definitely see the results. All right, so here's a, well, that's not even a really good one. I'm still looking for the ones I had. Here we go. Well, hold on one second here. Here, the point I was saying before, because this is a divergence, not the divergence I was looking for. Like I said, I got to backfill some of the older data there because we're getting long in the tooth on this chart. But this was a good divergence on the 5-minute time frame, and the important thing is to understand that you can see what happens. We rotated up pretty fast, but once we got into that overbought, we just kind of tagged that 80 there. We pretty much went sideways, and that really means if you get a nice divergence, you have a high probability of a move in the direction of the divergence. As you can see, the arrow here pointing from low to high, to the higher low. So that line is pushing up. It's kind of an interesting way of looking at it. So if you get confused on that. But the truth is, once you get up here, then the majority of the move is probably behind you until another setup comes, and it really depends on that time frame. So once you exhaust that 5-minute time frame, it could actually rotate back down and start getting into another groove. This is a true signal here, and this is not even the best signal. There's a lot better signals out there that come around, each day, and we see those on the daily. We see those on the hourly. What was the hourly here? Well, you know what? Maybe it was actually the hourly I was looking at. I apologize. I think I was looking at the hourly time frame before, and I just wanted to show you that this type of divergence right here, because it was just a clear divergence. This falls right into the criteria of what we look for. The low at 20, the pop back up, and the market pops a little, but then takes out the previous low, and we hold above that 20 line. Now, if they both hold above the 20 line, that's extremely bullish. And again, this line here pointing up here really represents the type of trade you're going to see, and you're going to look for that upside move. So you get a nice upside move, and you can see here we got embedded. We eventually rolled over and pulled back down, and we got another signal here. But the truth is, when you have that divergence, that's your entry. You have to just respect the time frame, and you really have to take consideration of taking profits or locking in profits or protecting yourself on a rotation like this. This is a business, and we're giving you the best setup. The hardest part in this gets all traders is that they might get in late, they might not get in, and then they end up wanting to get some kind of profit that's in there mentally. They mentally want that, but that doesn't mean the market's going to give it to them. The market's most likely to give you a nice rotation before it comes back and frustrates you again. If you have the, and a lot of people have that strategy to kind of trade, swing trade these moves and understand the bigger trend, and that's fine too. But we're just giving you a methodology that works on all time frames. If this was, and again, this is a daily, so this is multiple days of the contract. So this is like the longest time frame we really look at, the daily, versus like the 5-minute time frame. So you have a daily, and you get a divergence, and it pops, and maybe you get in here, 2084, and it moves up to about 2119. So 84, 16 and 19, there's 35 points. So 35-point move over the amount off of that divergence. 35 points. You only want to go into this one. It looks like a 50, 60-point move off those, and that's just based off the time frame. But when you look at a 5-minute divergence, we might go out here and say, all right, here's your divergence back here on the 5-minute, wherever we were. And we'll probably, again, that 5-minute chart has been funky on me. See if I can find it again. There it is, right here. I have a little divergence, and it moves up here, and it gets overbought here. But you don't get, you get a very small move. Eventually, you did get a little pop on this, but that was at the end of the day. This is for traders. But you're gonna get that pop. But respect the criteria, respect the time frame, and that's the key. That is really just the key to trading right there. So getting back to what's happening here, daily runaway gap. We'll zoom in here. There we are. And I want to also show you the weekly here. Here's the weekly. So a little better look at it. And then we're going to look at the monthly. Now the monthly was interesting because it just kind of falls into a the theory that, hey, this could be really big here. I mean, look what happened 2013, 2014, 2015. For 3 years, we were embedded on the monthly stochastic. And, I said this last year. I said, we're getting embedded on the monthly stochastic. There's no reason why this rally doesn't last a couple years. And, and again, that's, it's a tough call to make. But, we're in a situation where we have the ingredients for that to happen. The market here is showing the strength, and it is, and I think those non-believers could be slowly starting to capitulate and trying to get back in the market. Breakaway gaps are caused by traders who feel they're about to miss the move, and they get in. Because normally, you're not really buying the highs, especially, 7-year highs or 6-year highs. It's just that is a 8-year highs. You just all-time highs. It's just more of a dangerous move here. But in this case, we have different rules on the table. We don't know what's going to happen in the future. I call this the Trump breakaway gap, runaway gap here. This could be the start of something really big after the consolidation broke out. Now, we're going to continue to trade like we do. We're doing a good job. We have to wait for the setups. It's not like we're going to chase blindly here. But it wouldn't be a bad idea to get a great focus list together and concentrate on those stocks, just on rotations, fast rotations back to the 60. And if you get the daily rotation, unless there's the writings on the wall or something out there in the news that is affecting the market, these are going to be some opportunities here. So, I just want to touch base with you. It's a 15-minute video. Hope you enjoyed it. Again, also remind you, Wednesday we have this great show. I know we're going to have our guest. Tight Stops is usually kind of co-hosting with me, doing a great segment on I'm going to say insider purchases, not insider buying, insider purchases, and then we have we'll have another topic. I'll make that topic tomorrow, and I'll tweet it out and send it out. Until then, we'll see you in the markets. We'll see you in the markets on DayTraderRadio.com. All right. Oh, one last thing. Yeah, the Gilead, The Sienna continues to be the best bet for the week. I think we get to our target on that. That's all but on the HPS watch list. And if you don't have the watch list, you have to be a member of Day Trader Radio. Also to try out the tradeometer and everything, the dashboard, and all those other great features. So check it out, daytraderradio.com.